The term pre-qualified and pre-approved are thrown around a lot in the mortgage space and even real estate agents. They're a lot different and they mean different things. So in this video today, I'm going to give you the clarification on there, and you can start using the right terminology to look important and get your offer accepted. Stay tuned, you're not going to want to miss it. We're covering it now. What is mortgage pre-qualification? Mortgage lenders give the borrowers the option to see if they're pre-qualified. It involves submitting some basic financial information and undergoing a credit check to determine how much of a house they can afford and possible interest rates that they could qualify for. A mortgage pre-qualification is only a general indication that could be a pre-approval or an approved mortgage. It's not for sure saying you're getting a mortgage. It's just the process to see if they can qualify for a mortgage. Here's what I want you to think about with a pre-qual. Anybody can go online or make a phone call and give up basic financial information and make it up to appear as if they're making more money to qualify for a larger house. So just be aware, just because they have a pre-qualification from a website doesn't mean that they've looked at any of their financial numbers and nothing's actually been checked or verified. It's been submitted, and that's with the trust of the person actually inputting it. A mortgage pre-approval is a letter or written statement that specifies your maximum loan amount and the lender's commitment to fund that loan if your financial situation remains the same with everything you've given them. To get a mortgage pre-approval, you need to submit a formal income, savings, debt, credit card, student loans, and everything is submitted into that, so it's more formal. Your mortgage lender uses the information to determine whether to offer you a loan and what's the max amount and interest rates. So those are pretty close to final numbers, and a lot of the time they lock it in. It's not set in stone until the loan actually goes through with underwriting and information is verified through an application, is confirmed by the lender, and if there's some discrepancies or something's missing or something comes up. But for the most part, you can feel rest assured that it's a lot closer than what it needs to be, and most of the time that's what it's going to be. It is a little more complex than pre-qualification because you're having to do more legwork, but at the end of the day, you know that it's going to matter, and when you're submitting an offer, especially for clients, it's going to stand out because they actually have done all the work and the deal's less likely to fall apart. So in conclusion, it's important to know the basics on lending and the difference between pre-approval and pre-qualification so you're not using them the wrong way, and when you're working with a client, you understand their actual buying power and the credibility behind that letter, and you don't sound like you don't know what you're talking about when you're talking to a seller on the buy side. Hopefully you found this video important. Subscribe, like, and if you want to comment on any video that you'd like to see in the future, we'd love your feedback.